Hey folks, good morning. This is Anne Marie. This is the extended SPY report for Tuesday, August the 6th. We are looking at a little bit of flattening action, starting with the daily chart here. We can see flattening on this level. We can see it on this level, 4 hour. We can see it on this level. Listen, this is ideal, okay? If all of our time frames are telling us the same thing, we need to be careful, right? We need to be very careful taking longs, and the charts actually are extremely congested up here. So there are a couple things that we can do. We can sit tight until it completely breaks these levels, right? Gets out of this channel event that's below maybe 170.34 or above 170.97. We could do that, or we could play around in the middle here. Guess which one is going to probably benefit you more? Yes, indeed, not a trick question. Get out of this noise, okay? Now, if you are playing a little bit more aggressively, that noise can still turn into trades. Let's take a look at the 15-minute chart. As many of you know, this is the chart that I run during the day, and we can see clearly we've got wave action that we can take, right? So we are sitting at the tops of these levels, and at the bottoms we are bouncing. If we take a look at this formation right here, we could be in some kind of triangle. We still have this to watch out for. And again, also look at the 15. Same relative location, right? There's a big trade coming here in SPY. I don't know where it is, right? And it could be that it's just coming back into support because the charts are still very, very bullish. Or it could be that it's breaking down. I'm going to go with the first bet because that's the most obvious. Look at how much this chart had to get through yesterday. Why it was not a good idea to take trades in either relative direction. Right? Whoa. Okay, the TF just rolled over right there. Okay, so now we do expect a little bit of rolling action here. So what are we going to do? We're going to wait for the loss of this 170.54 area. Why are we not paying attention to this? Because a lot of the work is here. The buyers that were here have stepped up into here. So if we break down here, it means that these buyers are likely to be gone. Now, there still might be buyers here, but that does give us a chance to step down just a little bit into the region. You're going to notice in the blog, which is where you're going to find the actual levels of everything, you're going to notice that the blog targets are very tight. Why? Because the market is congested. Now, once it gets out of the congested space, it can run very nicely. We still have a gap formation to take care of that we really, we really want to focus on, right? I just saw that I had a level written wrong on the blog. And so, we really do need to pay attention to these things as they come in to the pivots and come in to these moving averages. So that being said, the temperament of the chart is flat to down, but the down just is pulling into relative support at this juncture. A lot of people, like I said in the All Access SPY, a lot of people really want to participate and haven't had a chance to. This pullback is going to give them a little panic buying opportunity. And so we want to be careful not to be on that side. Let's not be panic buyers. Let's not be panic sellers. Let's just pay attention to what the charts are doing and do what the charts tell us to do. And they're telling us to be very careful right here. But if we lose the monthly VWAP, the 50, the 30, the 10, or that's the 30, that's the 10, we're going to have downside momentum, right? it is going to drift into these support levels. Watch it. If you take a long and all of a sudden it loses your support, don't hang out. Like I did with Netflix. Shouldn't have done that, because I was on the short side and did see it begin to pop and did not pay attention to that. Pay attention to that pop side if it gives it to you. Pay attention to the drop side if it gives it to you. Just be cautious. Target ranges can come all the way down into this area, 169.46 and lower. If we have a cascade, it could go much, much lower, right? But we are just watching. Key levels, want to see what it does up here. If it exhausts itself into this range and then just rolls over, we shall see, right? Okay, let's take a look at, you know what? One thing I do want to tell you, stops. If you take a long above here, look at the chart and look at where major congestion is. That's going to tell you where your stop event, you should have two stop events, a primary and a secondary, one that exposes you to a minimal loss if it really falls over, and then the final stop, which takes you out of the trade. And so for me, if I take a long here, there's so much congestion around here and so much wave action that's noisy. Legitimately, my stop cannot be any higher than 70.54, 170.54. All right? I can have a secondary stop action, however, right around here at 170.72. Use that same kind of mechanic with your downside trades, and you'll be pulling yourself into some pretty good spaces. Let's take a look at the IWM doing the same thing, trying to get up into this area. We are gapping down just a bit, little bit, not a lot. But the wave action here is much more steady, right? It's not flat completely because it is still making higher highs and higher lows. This formation is still strong. Momentum flat, but high. And so what we want to watch for is this line right here, the 105.14 area is going to be the stopping region for, see this big candlestick, it ended all up here. The stopping area is going to be somewhere around here if you take a long, right? Could be right under there. Could have this VWAP as a suction. Look at this wick. But bullish formations, as it comes into test R2 and then faded into R1 and then ended over the midline between R1 and R2, that is suggesting upside momentum. So that being said, the stop for the upside event should be about 105.13, right? The stop for the downside event should be the high of the prior day, or actually you could use 105.59. That's also a good breakout area. We know if we breach this region, we're going to come into that 105.78-ish area, probably 105.86 to 106.02, that sort of thing. If we lose this congested region, now listen, a short is going to be a little bit tough. If you're going to be aggressive on the short, the loss of 105.35 is going to be a good move to the downside. If you are conservative, you cannot short until you get out of this mess, which is all the way down here at 104.89. You could take the introductory short here, but it could bounce easily off the pivot. It could bounce right here. I'm not saying don't. What I'm saying is be prepared to be chopped around in here and wait for this thing to settle down. If it begins to roll over on the smaller time frames, hang on just so long as you don't make new highs, right? So if it fades here and you take the short, at the loss of this 105.35, 105.36 area, you got to make sure that your stopping region does not drift above this region right here, because you're probably going to be sitting on the wrong side of the trade, right? Testing areas, you know, there's a lot of congestion here. Looks like 104.67-ish to 104.75-ish. You've got to stair step. These levels are soft. What should we do? We should come right into the weekly pivot and the 50. That is my thought. As this pulls in, look at this. This stayed flat for a long time. Chart keeps rising. That's why if it breaks resistance, it doesn't mean don't take the trade. It just means to be cautious in the trade, because it can move to the upside quite significantly, as it did right here, continuing to be generally flat. The slow SMI, that is. All right, so that being said, we want to watch this as it loses level. Make sure that that SMI confirms. That ought to be the bounce point for this chart. Overall, the 50 is flat. That means that we're very likely to come into the 50. Notice the distance between the 50 and the 200 also tightening. All right, let's take a look at the cues last. Sideways, particularly yesterday. However, 2 days before that, very aggressive. The weekly pivot from last week to this week jumped a lot. Okay, jumped over $1. And so we've got all this acceleration to the upside. I mean, we can't even see the 200 in this 1 hour chart. It's that far away because this chart is aggressive. Look at how linear this is, right? It's almost a straight line to the upside in a nice clean slope. Now we're flattening. This gives us a very pretty tight formation. What do? We could play in the middle here if we wanted to, right? But the best thing to do is wait for it to get up and out over these levels above 77.09, you know, below 76.78. That seems like the best bet for us. If we do that, we can go to the blog and stair step down into these levels, right? 76.64, 76.53-ish, and just stair step it down. The blog levels have it. What's the purpose of the video? To give you a flavor of what's happening overall. Notice, still climbing, right? So there's a lot of aggressive momentum still sitting in here. It's just sitting at 90. And so let's remember, the way technical analysis works is you look at what happens to the chart when it does things like this, gets up into these massive levels. And if it does the same thing every time, or most every time, you do what it says. And see, this can't continue. And so we run the risk of that kind of event, but the way it looks, we haven't had too many gaps the last few days, so we should have a nice rollover into support. And that's exactly what this thing does. Look what it does. Here's the break. It rolls right over into support, and then it begins to pop. That's the nature of the market here. Nice move up, roll over into support. No need to run for the hills if it starts losing the low, but we do know that it does need to come back into support. Again, the likely area, the 50 and the weekly pivot is my thought. Maybe a little bit lower because of where congestion is. This would make a complete S-curve event at 75.75. So I am going to keep my eyes on that region, 75, 75, 75, 77, something like that, that gives us a little bit of motion in that direction so we can see it moving up. All right, Good luck trading today.